So, you've got an extra $1,000. What do you do with it? I mean, what's the smartest way to make that money grow? Well, today, we're not just gonna guess. Nope. We're getting the actual blueprint from one of the greatest investors to ever live. Yep, $1,000. That's our starting point. Look, it's not a life-changing lottery win, right? But it's a real, achievable amount of money. And believe it or not, it's more than enough to get the ball rolling on building serious wealth. So here's the fun part. What if we could hand that $1,000 over to one of the most successful investors in history? Just ask them, hey, what would you do with this? How would they even approach it? What's the secret sauce they'd use to turn that small pile of cash into a real fortune? Well, our guide on this little journey is none other than the Oracle of Omaha himself, Warren Buffett. And the amazing thing about him, he didn't just wake up with billions. He started small, just like us, with a set of really simple but incredibly powerful principles. And that's exactly what we're going to unpack today, his blueprint for the rest of us. All right, so let's get into it. Before we even touch on what to buy with our money, we have to get our heads in the right space. We need to understand how Buffett thinks. See, his whole strategy, it's all built on this one huge mindset shift. You're not just buying a stock ticker. You're buying a tiny piece of an actual business. And this quote right here, it just nails it. Our favorite holding period is forever. This means you can just tune out all that crazy daily market news. Forget about trying to time the market perfectly. Buffett's whole deal is finding great companies and then being ready to own them for a long, long time. Maybe even, forever. And that is long-term investing in a nutshell. It's not about frantically buying and selling. It's really just about patience. You buy, you hold on, even when the market is going haywire, and you give your money the one thing it absolutely needs to grow: time. Lots of it. In fact, you can boil his entire philosophy down to just two almost ridiculously simple rules. And they're so powerful because they're simple. You ready? Rule number 1, never lose money. And rule number 2, never forget rule number 1. Now hold on, that doesn't mean avoiding risk altogether, because that's impossible. What it really means is you protect your initial investment, your principal. You do your homework, you make careful, smart decisions, and you avoid making silly mistakes. The whole point is to not suffer a huge permanent loss that you can't recover from. Okay, so we've got the mindset, we've got the philosophy. Now for the fun part, the actual step-by-step plan. How do we take all this great thinking and apply it to our $1,000? And look, Buffett gets it. He knows most of us don't have time to sit around researching companies all day. So for people like you and me, he's laid out this super simple but incredibly effective framework. It's just 4 steps. That's it. Okay, so what are they? First, stick to what you know. This is his circle of competence. If you don't truly understand how a business makes money, just don't buy it. Simple. Second, you have to think in decades, not days. This has to be a long-term game. Third, watch out for fees. They are the silent killers of your investment returns, so you have to keep your costs rock bottom. And finally, automate everything. Set it and forget it. That way you can be patient and let the magic happen without you messing it up. All right, so we've got the rules, we've got the 4 steps. This leads to the big question, right? Where do we actually put the $1,000? What is the one thing Buffett recommends for most of us? And here's the key idea. Trying to pick the next big stock, the next Apple or Amazon, is like trying to find a needle in a haystack. It's incredibly hard, takes a ton of work, and most people fail. So Buffett's advice is brilliant. He says, forget about finding the needle, just buy the whole haystack. And there you have it. That's the answer. For pretty much everyone, Buffett's advice is crystal clear. Buy a simple, low-cost S&P 500 index fund. It is, without a doubt, the easiest and most effective way for a regular person to own a slice of the biggest American companies and grow with them over the long haul. So what even is that? Well, just think of it like this. It's one big investment basket. And inside that basket are tiny little pieces of the 500 biggest and most successful companies in the US. We're talking about Apple, Microsoft, Amazon, the big guys. So with just one single purchase, you're instantly spread out across the entire top of the market. It's diversification made easy. And get this, Buffett is so confident in this strategy that he literally left these exact instructions for how to invest the money he leaves for his family in his will. A simple 90-10 split. 90% goes into a low-cost S&P 500 index fund for growth. The other 10%, short-term government bonds, just for a bit of stability when the market gets rocky. I mean, it really doesn't get much simpler or more powerful than that. Okay, so we've covered the why, the philosophy, we've covered the how, the 4 steps, and we've covered the what, the index fund. But there's one final ingredient, and honestly, it's the most important one of all. It's time. Because this is where the real magic starts. Just take a look at this chart. It shows you exactly what I'm talking about. Look at what happens to that initial $1,000. After 10 years, yeah, it's grown, that's nice. But check it out after 20 years, it's really starting to take off. And then, by year 30, the growth is just explosive. That curve gets steeper and steeper. This isn't just adding money, it's multiplying it. It's exponential. And that incredible phenomenon has a name. It's called compounding. It's your money making money. And then that money starts making its own money. It's like your money's working for you, and then its kids start working for you too. It is, hands down, the most powerful force in investing. And the only thing it asks of you is patience. Which brings us to this final quote. And it just says it all, doesn't it? Someone's sitting in the shade today because someone planted a tree a long time ago. That small, simple act of planting a seed, investing that first $1,000, that's what creates the shade, the security for your future self. You don't get a big shady tree the day you plant a tiny seed. It takes time. It takes patience. It takes a little bit of foresight. So here's the bottom line. Warren Buffett bought his very first stock when he was just 11 years old. The best time to start investing was yesterday. But you know what the second best time is? It's right now, today. The blueprint we've talked about is incredibly simple. The tools to do it have never been more accessible. So really, there's only one question left to ask. When are you going to plant your tree?